Hello and welcome to mentfx. This is the fourth episode of the overall installment of however many masterclasses we are going to have. The awaited and promised liquidity video, where we're ultimately going to look and define and understand liquidity in a sense that you probably have not understood before, potentially giving you a perspective of the market that you have not yet had, or that might create momentum in your future trading goals. Okay, so as you all know, we've been watching this. I don't know if I've made a video on this just yet, but I've been watching this accumulation, this Wyckoff accumulation, expecting a buy from in or around this area. Price could just come through as well, so we're looking at this area right here too. Still looking to spot a few things in here. One of my students has actually sent me this before it happened. As you can see, it's your JPY on October 25th, just as it was up here. With the expectation that it was going to come down, potentially come lower to that area, which is in line perfectly with what I have now. Him predicting this down movement and actually catching trades off of this movement here, which is very cool on a lower time frame. So he's up on this position right now, looking to take out quite soon, and then looking to possibly get in down here, as this market might drop even lower if we do not have Wyckoff accumulation here, and this is just a redistribution. Okay, but this video is going to be mainly focused on the concepts of liquidity and how ultimately and why you've lost money in this market. So we're going to get rid of everything we have right here. And before we start, I just want you to consider your own trading journey. Just real quickly, for those that have, either dabbled around with a lot of different strategies, or those that have found a lot of faith and belief in the ideas of support, resistance, retail type things, with Fibonacci being respected because it's a value that occurs throughout nature. I used to be like that too, but I just want you to think about the many times that you've found a perfect setup off a perfect. So we have something like this off a perfect resistance, just like this. Looking to trade that as a trend break occurs, or whatever it might be. Looking for that trend break, that retouch, maybe looking for buys here. And what happens with prices, you'll often see this, a price will break right through, touch potentially getting you into sells, and then just take off. And you're left there wondering what happened here, okay? Now, this is your first introduction, without you even knowing about it, to the concept of liquidity, okay? This is one of the biggest things that happen to those that start. And this is one of the reasons that people that do begin get really attached to trading support and resistance and other retail concepts, because after the fact, as you know in my other videos, and we've gone over this, when you see something like this hold for over 1, 2, 3, 4 times, and you notice that you could have made money on all these areas, you start to look for, and your eyes become adjusted to looking for areas like this in the market. And what happens is, by the time your eyes have adjusted and price has created something like this in the market, your trade will often break structure, never retest, potentially creating areas of resistance and support that you try to trade off, breaking areas of support resistance, creating some diamond pattern potentially, and and ultimately creating price where you could have basically looked at it and spotted something that accounted for the price move, right? The thing I'm trying to say is that there's always going to be a reason for price to move from a certain area. Okay, I've done this before in some of my sessions. I've taken a line, I've put it randomly on a chart just like this, and I told my student that it might not be 100%, this might not work fully, but this line will come in handy at some point in the future, and basically I'm just the god of predicting things, right? And I'll put one right here, and I'll put another one for the sake of it right here, even though price has done stuff around here. So the next time price comes to these areas, let's see what happens. Okay, so price comes right through that, breaks it. See, never retested because the break was really strong, so it continued. Coming near this area, showing some resistance. Okay, showing a little bit more resistance right there. Breaking through it, becoming support. Okay, becoming resistance again. And as you can see, you got a perfect entry right there before it dropped off again. Okay, and this one never even got hit. But my point is, you can go and try this yourself. You can go on any pair, you can draw a line, and you're going to notice that it does something for you, okay? Because what happens when you learn to trade in the way of support and resistance, and the way you're normally taught to trade, resistance breaks and all this other stuff, what happens is, once you have these boxes or these areas of interest or these trend lines on a chart, they become the only thing your brain almost notices. So all this chart inner work becomes kind of ambivalent to you, and when price gets to that chart or to that line and respects it in one way or another, and you might lose like 4 trades on it before you actually get into a valid position, if you even do get into the position, you'll blame yourself for not waiting, or you'll blame yourself for, or you'll even commend yourself for finding the perfect area. But then you'll notice that, oh, I should have looked and done this instead, right? And then you start getting deeper into using more oversold and overbought conditions, and all of a sudden you think you have something that works, and what happens? It ultimately all fails again, and you start hopping strategies. And we've spoken about this in our other videos, right? So for instance, I can literally go to anything. Like, let's just go NZD and scroll down and click on the. Okay, so that's not an actual currency. NZD. So what we'll do is we'll actually just type in another random one, CHF. Scroll down randomly, press enter. Okay. So look at CHF SGD. We'll just go back in time like this. Okay. Here we go. This is all we know about price. And what I'm going to do is I'm going to do the same thing I did last time. I have no support resistance up here that I don't see. So I'm just going to put a random line here. I'm going to put a random line here. And I'm just going to put random lines throughout. I'm going to put one line, let's just say here, and one line right here. Okay. Just randomly. So these I literally have no idea what's going to happen. I've never looked at this currency in my life. But the point being is, let's say these are your lines on your chart that are in your eyes support and resistance, right? Because some people see resistance here, others see resistance here, others see resistance within this resistance here. Other people are in a lower time frame looking at the resistance right here. You know, other people are looking at the support that became, the resistance that became support here and losing trades off of this move right here, right? Every area on a chart can in one way or another be impactful and then be looked at, you know, as something that you did right. So for instance, these lines, you just saw me put them on a currency we've probably never looked at or traded, and I can guarantee you that something's going to happen at these points, and as one of those gurus online, I can go to you and say, you see, I know what I'm doing, and you could have traded if you followed my system and buy my $3 million course where you're going to learn the same stuff you've been learning and nothing more, okay? So watch this. Let's pretend like I'm one of those traders and I'm telling you, this is an important area, guys. Watch it. I sent it out in my Telegram. Good luck. Here we go. So we're approaching it. Okay, we never get to it. Maybe we get to this area now. Okay, so just keep in mind where price will touch one of these areas and do something impactful. Okay, so you see how price got very close. Maybe you got into a position there, but I would still be waiting. Okay, so price came close, just broke it ever so slightly, creating, as you can see, an area of resistance now, but, you know, we need to wait. So maybe you can sell right there, okay? So as you can see, price is consolidating, and it's consolidating here because this is a very important key level. Keep in mind, this level was drawn in randomly on a random currency at a random time, okay? Look at how it's consolidating in it, giving it another touch, and taking off perfectly. Notice that right there, okay? So as a guru, I can come to you and say, there you go, this would have been your buy with a stop loss just under the lows. And as you can see, you've already made about, what is this? You've made 1 to 6, at which point you would have gotten out, right? So you've made 1 to 6 already, it comes back to consolidate and breaks it finally. Okay, so now we want to trade on the retest of it most likely. And there you go, we're just consolidating in it. As you can see, you got a little bit of a move here on a lower time frame. You could have traded that. We break through again, creating that support line. And you know, you see how we're wicking it perfectly because it's such a key area. It's a very important area. And when we break away from this, you can expect that price is going to move so quickly. So as you can see, price really likes this area because it's a very key area. And we shall teach you this in my new course, blah, 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 so on and so forth. There we go. See how we come out, we test it one more time, and we finally take off. That's how you know it's a very key area, taking off above all these areas. And there you go, retouching it again for a little bit more entry potential. Another entry potential there, becoming one more fake out here, and then we just continue upwards as you see. And you could have been, oh, and there we go, we're here in price now. So notice how this level that I drew in randomly became a very important area of consolidation before we finally broke and created this beautiful move that you should have actually caught. And if you didn't catch it here, right here, and you catch this for about 1 to 6, if you didn't catch that, you could be waiting for, of course, this this head and shoulders to break, and then wait for the retest of this earlier area that was resistance that became support. And this was your perfect entry after this one little fake out right here. You'd enter right there, stop loss just under that low, and you'd be up right now about, you know, 1 to 17%. But you know, you need to take my course so you understand how to find areas like this. Okay, so this whole charade that I just went on was a basic idea of how you've been lied to, ultimately, about how you should be trading and how you should be looking at the charts in terms of support resistance, right? The reason it sometimes works is because when you put any line onto a chart, eventually something is going to happen at that line, and you are going to basically give yourself the I don't know what you want to call it, the fairy dust of pretending like you know something about the market, right? And eventually you're going to notice that even when you get and predict a certain important area, you don't know when to enter, how to enter, where to put your stop loss or whatnot. Because if you saw here, before this line became a very nice line for great opportunities, right? It was completely trash in the forms of getting in at FOMO levels, getting in at touches that might have not held, getting stopped out, getting, having lows for them that got broken instantly, okay? And the most important thing about this that was going to segue into the point of this video is the notion of liquidity and how we create it in the market, who creates it, and why price moves the way it does. So we're not going to get as in depth in this video as I do with my clients, because those sessions go on for 6-8 hours at a time, and we get significantly deeper into what's actually going on in price. But the notion is that price creates an area, having people buy at that area and conduct some operations, breaks that area to have people stop losses taken and their sell stops taken, so we can load up on other positions to take the price higher, creating a new area that's the same, creating it multiple times, aka what? A support, breaking that area and having it hold on the other end, making it look like resistance, taking out what? Stop losses and sell stops to create more positions for longs to take it much higher and start profiting off of all the people that are trading, quote unquote, the wrong way, okay? This is how everybody is usually taken out of the market, and you probably had this happen to you. And the reason I went on to the anecdote talking about how you might have a area of support where price has been hitting multiple times, you may be traded here and it gets broken, and then you may be traded here before it gets broken again, and then it never comes back and it just continues lower. And by the time you get into this trend, so does something like this, and by the time you see this occur and you begin to get into this downtrend, you'll notice something like this happen and then a continuation, or you'll just notice it break forever and continue, and you'll be left wondering what happened to all the setups here, right? And you'll be looking at it saying, okay, well, I knew this was resistance and I should have traded it when it tested it earlier over here and took off, so I'm going to trade it on the next one. So you try trading it right here, and what happens? It blows through, gives you a retest, and again continues, right? And you're left wondering again, what happened? Your stop loss got hit, your sell stops got hit for that range trade out, and then it continued without you, without ever coming back, right? And during all these times, you start, defining new trend lines, thinking this is a downwards trend line, this might be becoming an upwards trend line, and by the time that's defined, what happens? The same. Price blows through and you start losing more trades, okay? So why does this happen? The answer is liquidity, okay? So let's jump into what liquidity itself is and why it's so important, okay? So liquidity is defined in many different ways. You can go watch videos that go on for hours about it. You can go read books that go on for hours about it. But ultimately, the simplest way to think about liquidity is the following, okay? Liquidity is where the orders in the market lie. Lay, one of those, doesn't matter. The idea is where do the orders in the current market lay, right? So for instance, if I was one of you trading the way we have been taught to trade thus far, right? What important areas would we be looking for when we would be trading this market, for instance, right? So this is a very weird currency. Let's go to something that is just nicer to look at. Okay, so something like this. Okay, so when we're looking at this, the important areas that we start noticing as retail traders is what? Well, I'm not sure because I don't trade all retail anymore, but we'd most likely be noticing this trend line, which is forming what we would like to call strong support, looking for potential new touches off it to continue higher, right? We're starting to notice things like potentially head and shoulders being formed like here. So there was a head and shoulders, I guess you could call right here. Maybe a new area of resistance being formed here, right? There's, like I said earlier, there's constantly multiple lines we can put on here, but this is the one that all of us would see, okay? So as price approaches it, look what happens. Price comes to it, and blows through it rather quickly, okay? So this is where I begin to ask some of my clients that are retail traders what they would do in this case, right? Some would just be buying when it touches, with their stop loss maybe, you know, under this low. Others would be looking to, so let's just replay this. I don't know, maybe it will work and my explanation is going to go to crap, but it'll still help explain what's going on, right? So right now I need you to think about what retail traders are most likely doing. They're most likely looking to buy this trend line, right? As well as that, they're looking to maybe come for a retest of this area here before break, right? Or they're coming to look at this area as a strong support that, as a strong resistance that was a support prior, so it's beginning to form, looking for sells off of here, right? So they'd be looking to most likely buy here and sell here, something along those lines, okay? So what you would have to imagine is, if you ask yourself, where do most orders lie? Well, orders lie under these lows right here, under these lows right here, under these lows right here, and now that more retail traders are looking to enter this, there's more buys here. But at the same time, what we have to recognize is there were a lot of people that entered shorts here off of these retests, right? And they're in profit right now, so they're very happy, okay? So what happens is there's also orders here of many people that got in. So there were, like I said, millions of people that are entering this. So let's just imagine it's one person, so it's you entering here with your stop loss above the highs, right? As it normally would be. And you'd be targeting what? Okay, you'd be targeting way lower, or maybe your stop loss would be higher because you're afraid of having this area kind of coming into kind of getting hit again. But most people trade like this with their stop loss just above a high, and you'd be anticipating that price is going to come, you know, lower. And this is where the whole idea of risk management plays in. So even though you might have been right about this becoming a resistance, which again I don't believe in, because every area becomes support and resistance at some point. Okay, you can literally trade any area you want, right? The reason it could work is because you have great risk management, right? So by that token here, you could have already made some money, or like most traders do, and I know that you've done this too, you've gone into this position on an account that doesn't have too much money in it, maybe, you know, $1,000, $5,000, $10,000. So, and if you're only risking 1%, you know that this trade has only been worth about $300 now, but you want to make, you know, $1,000, $5,000. You want to make more money. So oftentimes you're going to be targeting way lower, and your emotions are going to get in the way, and you know you're going to get stopped out. But either way, let's say we do have those people that are selling here, and we have people that want to be buying this trend line. Okay, and at this point, again, I ask a lot of people, well, has this trend line been considered broken, or is it being tested? Right? So let's say it's tested, but maybe you want to wait for another candle to confirm it, right? Okay, so this candle does what? It creates a doji. So a lot of people are looking, or a pin bar, whatever you want to call it. So a lot of people are looking at that as a good opportunity to enter, right? So what this is creating right now, whoever is controlling this market, the supply and demand, whether it's a big bank or even other retail traders, whatever you want to believe in this point, liquidity exists right now above these areas and below these areas, and these areas, okay? That's the simplest way to think about it. When someone asks you about liquidity, the real question is, where are the orders in the market? Okay? You don't know this 100% of the time, but you can, as you start noticing more things, understand why some areas are quote-unquote key based on what orders are resting there. And what the market likes to do, and this is going to be profound for a lot of you, is travel into those areas of liquidity to pick up the positions of the counterparty, which is often you or another smaller bank or a company that is trying to mitigate risk and hedge risk, to grab their orders to take them to a different place. Okay, so let's see what happens. So it begins to be respected. So a lot of retail traders are really happy with this buy, if they got into this buy, and potentially they're holding it, right? Because they want to hold it to get above this, maybe. We don't know specifically. So let's pause this real quick, sorry. So it's coming back up to this area of resistance. So what's happening now? As this area of support became resistance, these little moves here had a lot of people interested in selling. So some people had already started selling here. So when this move happened, we're already starting to take the orders off the people that sold preemptively, right? And now, as we continue higher, the people that sold into this engulfing candle right here have just had their orders stopped out again. Some people actually sold here, but then had their stop loss up here, so they're still okay, right? What you have to do is you have to kind of visualize what's going on in this market. At every point, there is someone on some time frame that is seeing something unfold, right? Because there's so many strategies available to you, there's so many patterns available to you. There's the shooting stars, the pin bars, the dojis. People are looking at Heiken Ashley's trying to get into areas. People are looking at support, breaks, resistances, trend lines. People are looking at engulfing, at shooting stars, at pin bars, at inverted hammers. There are tons of things that are constantly going through many people's heads. Constantly there's an act of buying and selling. But the biggest question is, where do most orders in the market most likely lie? And the answer to that in this case would most likely be up here, right? Because most people probably sold here. Even though this trend line is holding, most people probably have sells here. So what do big banks or smart money, or if you don't believe in that stuff, where are the orders and where's the market going to head to pick that money up? Up here. And once it gets there, what would it most likely want to do next? Well, if it's picking up the orders of the people that were here and using their stop losses as a take profit, most likely we could expect what? A movement down. So we could have a sharp move up and a movement down. I don't know if that's going to happen, but the reasoning behind why it would happen is liquidity, right? So let's take a look at what happens. So again, we look to respect that area on a shorter time frame. People start selling. More people are selling. More people are selling now as this begins to be a very respected, which becomes a very respected support that now became resistance, which is now holding very heavily. So we could expect probably that this might actually drop for 1 second, making more people want to sell because they're afraid of missing out, and then it could blow it out, right? So let's see what, look at what's happening. This is starting to get people into the market because they're afraid of missing out on this, okay? So many people on lower time frames are starting to see this as, you know, some kind of break of trend line, or some people on a lower time frame are seeing this as a engulfing candle, right? Now, even more people are seeing that. There are so many retail traders that are starting to enter this. And I know that if you're watching right now, you're most likely anticipating that this area is going to hold and then drop. And guess what? You might be right, okay? And when you see that happen, if you are right, it's going to play into your emotions more that you know what's going on in the market and you would have sold here, right? So ask yourself right now, are you going to sell here? Okay, as you're watching this video, pause and decide, are you going to sell here? And if you are going to sell here, where are you going to target? How are you actually going to target? Where's your stop loss going to be? Is it going to be here? Is it going to be here? Is it going to be here? Like, what is your approach to this trade? What are you going to be targeting down here? Why are you targeting it? And what you'll notice is it's easy to say, okay, market's going to come down here, and then, you know, it comes down maybe to here, and all of a sudden it reverses on you. You would have been like, oh, if I was trading, I would have known that and I would have gotten out. Well, that's false. You never know when a real low or a real high is going to form, unless, of course, you're very, very in tune with institutional order flow and what's going on, and sometimes you can pinpoint that. But generally, when you're backtesting, it's very easy to take retail trades and imagine that you would have played them out perfectly, like all these trendline plays, right? You would have thought you would have entered here, exited here, entered here, exited here, entered here, maybe exited here, or if it goes higher, you'd be even happier and think, oh, I could have caught this and made, you know, $1,000, 10% of my account within a second. Okay, so let's see what happens. Maybe we have one more move down, incentivizing more people to sell, and then that huge move up. Let's see what happens. So we have that huge move down that becomes a doji. People are most likely looking at this area as a continuation downwards, or whatever they want to call it in the retail sense. Again, holding that area, and check that out. The huge blow through, okay? Now keep in mind, we went to almost an imaginary area and begun to replay price. I wasn't sure this was going to happen, and I told you that we could expect price to maybe drop. And guess what? It would be in tune with your own way of trading, and you'd be more likely to believe that it's going to happen again in the future, because, you know, you're taught if it happens in history, it's going to happen again. If you saw this work, it'd be almost bad for me. But my point is trying to explain the idea of liquidity to you, right? And because you recognize that a lot of people were selling here, right? Because I asked you, where do the orders in this market lie at that point? Well, most orders, right? Because there are people buying and selling at every point within this market. But most orders lie at these sells here. Why? Because it's a very quote-unquote key area for a lot of people that are trading this, okay? Many retails looking at this as a potential final break of trend line, especially after the 1, 2, 3, 4, 5, 6, 7, 8, 9, however many touches it's had, right? And also what you have to consider is that the people that might have gotten in here at this trend line, first of all, did they get stopped out when the trend line broke through? On a lower time frame, when this trend line broke, what do you think it looked like on a lower time frame? Well, it looked like this and a retest before it came back inside, right? So on a lower time frame, this was actually a trend break and people got trapped there trying to sell it. And at the same time, if you did buy here, where was your stop loss? Where was your take profit? Did you get afraid of getting stopped out when this move happened or when these moves began to happen? Because on a lower time frame, if you did trade this on a lower time frame, this looks huge, like the biggest down move you've seen in the day. So you're going to expect that maybe you should get out. And then all of a sudden this happens. Doing what? Taking out every stop loss that laid above this, and now what has it also done? Okay, this is something that's very important. It's also gone ahead and taken out every person that was Actually, it put everybody that was buying here into the market, okay? So there were people that actually bought here too, looking for that what? Continuation upwards. Now, we don't know if it's going to continue upwards right now or if it's not. But what we have to recognize is that most orders right now most likely rest on the upside, right? So liquidity lies under, right? Because there's people that have stop losses where? Here, here, or potentially lower. So what can market maybe do? You can come down here, grab all those orders again before continuing significantly higher, right? We don't know if that's gonna happen, but let's take a look and explain the reasoning for price. So what's cool about understanding liquidity and getting very deep into institutional analysis, especially with what my clients are doing now, you begin to understand the intricacies of price, and you will start understanding the reason for each price movement and why it occurred and where it occurred. Sometimes you'll get lucky with a trend line and catch a move like this, right? But this move would be caught just as easily understanding that this was an order block that grabbed liquidity on a lower time frame, that continued higher, leaving an imbalance in an inefficient area here to come and fill it later, while engineering liquidity on the high end to come fill in the order block that was a propulsion block off of this one to come higher to take out this liquidity. Now that we've grabbed it, we can anticipate that price most likely wants to come down to grab the liquidity of people that have stop losses on this buy before continuing higher, right? Now at the same time, what you have to recognize is, where does some liquidity also lie? Well, in this area of resistance, right? So when price rejects here, what's retail thinking? Well, retail's starting to think that, okay, we're going to start the actual downtrend and they're going to try and call a top. So let's see what happens. So there we go. Price rejects. People start entering sells most likely, okay? Where does liquidity lie? Well, down here and then up here, right? Because people are also selling here now. People have stop losses here. People have stop losses here. People have other things that rest above these. You know, and price could come down for a long time before coming back up here. That's not our worry right now. Right now, the biggest question is, where's most liquidity lie? Well, now it's most likely lying right above this and a little bit lying down here. So we can see price come down to take out the people that bought here before going higher. So let's see what happens. Okay, so again, we have a price that starts going down on a lower time frame. What does that look like? Continuation downwards. So people are selling. And then we have this up move. Doing what? Starting to respect resistance here. So what are we going to most likely expect? A down move before a huge up move through it. To do what? Right, so here's our down move. Here's a new down move. That became an up move, taking out all the liquidity here. And now that we've grabbed almost all of the things here, of all the people that were selling, what can we maybe expect? A movement up to grab a little bit more for anyone that has stop losses maybe a little bit higher, and then a drop. So let's see what happens. There we go. So we had that huge move up, grabbing the liquidity, right, the orders that lay here. So now what's going to happen? Well, there's most likely nothing left up here to take. Where's the rest of the liquidity lie now? At this trend line. So maybe price wants to come and take out this trend line now. So let's see. Nope, price just wants to go higher. Notice this because it's taking more liquidity. Ever so slowly, ever so slightly, it's taking more and more liquidity. Okay? Now, this big move down is what? An engulfing for lots of people. And people are looking at this as an opportunity to sell. So most likely now, retail is trying to sell again. When in reality, price is just going to go higher. To do what? Take all the orders that they've started to put in as sells up here, right? So let's see what happens. Okay, so price sells off, right? Now we can ask ourselves, why is price selling? Well, first of all, it's filling this inefficiency, but also it's coming to grab all the liquidity of the people that were trying to buy here, right? So imagine this area. It's never been tested in the past. As it comes through, people want to start buying. They're seeing this uptrend start to form, and they start buying this. Maybe some people sell here, and they start getting into profit, right? And they're extremely happy. And we come lower to grab all that liquidity here, right? Now let's extend this trend line just to take a look at what it's going to do in the future, okay? And there you have it. Why did this happen right here, right? It happened because we formed enough liquidity under this area with all these up moves looking like we're breaking new highs, creating new structure higher, that this move here could have happened without an issue. Coming down to grab all the liquidity, aka the orders of retail that existed in these areas, right? So what can we expect most likely? Now we're just going to create more liquidity in the form of what? Support before dropping through. So support, drop through, right? Most likely. Why? Because all the people most likely right now, especially if you're watching this video, are looking for, one, the retest of this, and secondly, for this support now to hold. Okay? So here's your little bit of resistance. Here's another great resistance. This, for a lot of people, looks like an engulfing candle. They're looking to buy this, most likely. See how they're starting to see that there's a very little bearish pressure and a lot of bullish pressure. We start getting indecision candles, or whatever you want to call them. And then, all of a sudden, we spike down, creating a pin bar, inverted hammer, whatever you want to call it as well. And there we go. And we spike under all these lows, doing what? Grabbing the orders to do what now? Potentially come higher, to grab more orders here and go lower. So let's see what happens. So we come higher, grabbing what? All the orders of people that were selling here and selling here, because retail traders are doing what? Selling here. To do what? Come significantly lower now, most likely. There you go. And we start coming lower, okay? And now this resistance is not being tested. You see that? Notice how it's not being tested, because it might not want to even come there. And you see how it drops without testing it? Creating what? Liquidity on either side again, looking to do what? Take out the liquidity on the high side to drop through, okay? So we create some liquidity, we grab it, right? We respect this area, but we also break it. Why? Because there's people that are selling right here, or people that had FOMO and were afraid of missing the trade, looking to sell maybe a trend line here. And then people start seeing, you know, a potential trend line, a potential downwards trend line beginning to form. Or maybe it's here. Who knows? At this point, I don't know where retail logic is. Some people are maybe trying to sell a trend line here, looking for lower prices, and there we go. And we break right through it. So any trend line that you might have had here got broken once, broken again, now it's broken, and now you don't know what you're doing. And you're again in this state of, okay, let me wait for price to give me something, right? And you'll be waiting for price to give you something, and you're like, okay, I had support resistance and it never got retouched. Unfortunate. Let me keep waiting. Let me keep waiting. Okay, we're definitely in an uptrend. Maybe I can start buying now. We came above the highs. But what's going to happen the second you believe you think you know something, right? Most likely, there you go. Price is going to drop. And at this point, you just think it's it's just a minor retracement before going higher, maybe, or you think it's okay, it's finally going to start to fall, right? There we go. We fall past an area that was an important what? Support. Now we're holding that support. You start entering, and what happens? We shoot right through, creating, in my eyes, an order block. So we're just probably going to come here, trade off it for a little bit, for a second, to create what? Support for you before we drop through it. Let's see what happens. Right, we come down here, we trade off it for a little bit. Oh, and that's where we are now. Okay, so again, at this point, what are you expecting as a trader? Well, you're most likely expecting as a retail trader for higher price action, most likely. When I'm looking at this order block getting mitigated, filled, potentially price coming a little bit higher, and then dropping, right? Now, all of this that we just spoke about and I just walked you through as a story type of idea is what all my clients can basically now do to any chart. We can open anything and walk through every price movement and where price lies and where orders lie, right? The most important thing about liquidity, and it gets much deeper than this was kind of like the cream on top, and I just wanted to introduce the people that haven't known about it to the idea of it, and to potentially, you know, help you in your trading and shift your perspective about what you've been doing. Liquidity lies in areas of orders, okay? Wherever you believe there are the most orders, where liquidity lies, and that's most likely where price wants to go. Why? Because whoever's on the other end of price, who might have more money, as I like to trade, because I believe that, they want to go to that area to pick up the orders that you have, along with the masses, to take price in the opposite direction, right? So the way you want to consider or think about liquidity, and you've been minorly introduced to the idea of it, most likely in your retail career, when you've partially learned about, and you probably just kind of ignored the concept of it, a false breakout, right? So in your eyes, when you have a support or resistance in a certain area, and you're looking for that touch of it and the continuation, sometimes you'll wait and see what price does, and you'll sometimes start, or you'll get in and you'll start losing your trade, and then you'll have to get in later, and then you start losing more and more, and you give that concept, or you excuse yourself from losing to the idea of, oh, it was a false breakout, and then I could have caught it after, or I did catch it, right? Now, the idea of that false breakout is just the tip of the idea of liquidity, right? Because all you're doing when you're saying, oh, it's a false breakout, think about what's actually happening when you say something like that. The reality is price moved against you in that direction because it's giving you a perspective that you believe in now. It broke that perspective with its false breakout to do what? grab orders that existed there, either on your end or on someone else's end, to take price in their desired direction, right? Whoever that they is. In most cases, in my mind, it's smart money, okay? And the cool thing is when you start to understand that and you get very deep into it, you'll notice that when you have times where banks like to enter, or a composite man likes to enter, and for instance have a false breakout before continuing higher, they create, as we've looked at, an order block, aka an inefficiency in the market, right? So the idea is in the future, they need to come back to it to mitigate, to then, you know, do something else. That's what happened here, right? The market created a low. It created a resistance for you. It dropped down hard. They sold to create what? An idea in your mind that the price wants to go lower. People that were afraid of losing this or not getting into it began to enter here, 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 and even at the close, and even when it was up here, right? And people that thought they missed it would have entered at the close of it, no problem. But then after that, what happened? The banks began to buy extremely hard, right? Leaving what? Most likely a negative position in this area. So if you go look at some of my other institutional analysis videos, you'll notice that we constantly spot order blocks, and you'll see how they are consistently respected, especially in the future. If you look at some of my past analyses, you'll see how price came to that area, respected the order block, then either continued higher to an area of more orders, so liquidity, or continued lower to another area of inefficiency, which is also liquidity, which we'll get into in 1 second. So what happened here is, just as a quick example, price came up, creating some highs here, right? Creating what appear to be like maybe some neckline. I don't know. In retail mind, we don't have to think about it, right? The cool thing about having a retail background when you're going into this is that you start spotting your own things that you have traded in the past and starting to learn about, oh, it's a trap move, right? It's a breakout. It's a false move, whatever it might be. So when price came back down here, and we were expecting that when we were doing that replay tool, it was because it wanted to mitigate this little area here. But when it did that, why is it consolidating? Because they had a huge position here. They're consolidating to create what? Most likely a bias in both directions. Then they'll most likely have that bias break, having you believe this is going to be the future price, when in reality, they'll use this area to take your orders to do what? Potentially come lower into where? A new area of mitigation, or an order block, okay? So this is how liquidity is played back and forth. And every day, every single day, this will repeat. And you'll start to see it more and more. If you haven't experienced it enough just yet, you'll begin to start seeing it. And the cool thing about being introduced to something like this, even if you take nothing from this video, is that in the future, when you start to lose trades, trading retail with your trend lines and your support resistance, you'll begin to almost, your excuse will now no longer be, oh, it's a false breakout. Your excuse will be, oh, shit, you know, there was a bank behind this move, or there was a bigger entity behind this move, and they were just trapping me, okay? And the cool thing about this is it segues into the idea of there are traps that are set for you in the market, okay? Hence the idea of the false moves and false breakouts, or whatever it is. Those traps that are set ultimately shows you that there is someone who is playing this game against you, okay? And that brings me to my next point. If someone's playing this game against you and they're printing you perfect diamond setups, or your perfect retail lines, or your perfect divergence that you literally cannot miss-see, then why wouldn't they just use that against you as the masses begin to pile in with your orders to grab all those orders in the form of a false breakout or hitting a new area of support resistance that you did not look at before, but now all of a sudden you've become aware of, before moving in the opposite direction and leaving you out of that trade, even though you might have been right about the direction. And I know for sure, because I've had this with clients, they've had it happen to them, and I'm sure it's happened to you, where you've gotten into a position, it went completely against you. You might have gotten into the opposite side of that position, then it went completely against you too, and then it continued in the direction you were right about, but it never gave you that retest or that re-entry. And you were left sitting there going, crap, I should have just done this now that I see it. But you've never been able to actually do it. Maybe you've caught that one move, and at that point I say that's even worse for you, because you now believe that there's potential in, you know, trading like this for a living. And if you've seen any of my other videos, I don't want anyone to start leaving in the comments, you know, the idea that, oh, you can be successful trading, there's people successful trading support resistance and all this other stuff. And if you go and look at my other videos, you can be successful. But I ultimately explained that it's only because they've created an algorithmic way of trading out of it, which you can do significantly easier by just throwing a few indicators on a chart and starting to trade off of those. Not RSI, not MACD, none of those, okay? So I think this brings the video to a pretty good end, right? generally what I need you all to think about and to start looking at in the markets, especially if you're a retail trader, is how you're getting faked out and why price is moving to areas of liquidity, aka where the most orders lie, and why they're moving there, right? I've said it to everyone, I'm going to say it again. If you spot it and think it's the easiest thing ever and everyone's looking at it and it's a beautiful support line and you've seen it happen multiple times and there's support resistance that you're just guaranteed on, and you know that everybody sees it, why would price move from that area if there's another interest in the market that has a lot more money than you that wants to make money, right? So next time you start seeing something get broken or you see that false breakout, consider the idea of liquidity if you haven't yet, or if you're a beginner or you don't believe it, me or whatever. Even try a replay tool and just go through price and start watching what happens, right? We can jump on any currency, and I've done this with my clients. I've asked them for a currency, I ask them to stop at a certain place, I start replaying, and we start talking about what's happening to price. And by the end of it, the clients are able to discern what's happening in a market, where the market's most likely going to go, and where orders lie, right? Like very quickly even, this trend line right here, right? You start seeing this trend line form when? Not here. You don't see the trend line form really here. You're still looking at this trend line here, right? And then all of a sudden you start seeing this trend line form. So you're anticipating what? A retouch and then a sell. Okay, well that retouch kind of breaks it. So where's your new trend line? Is it this area right here? Right, so this trend line becomes this right here. So this is actually a full-on break and a retest of it that then doesn't get respected, but then is respected, right? And you could have been looking at this as, oh, I should have just entered on the full-on retest of it. When in reality, this could have been your trend line. And you might have seen this instead and started selling here and been very happy with this movement before we ultimately did what? Catapulted to the high side. Why did we catapult? Well, because we created enough what? Liquidity above this area, above this area, above this area, this area, this area, this area, this area, this area, and then at the same time on lower time frames, or even on this one, tons in this area, in this area, in this area, in this area. So at this point, there were most likely more people selling, or the masses were most likely selling than buying at these points. So by the time we got to an area where the composite man or smart money wanted to get involved, everyone had already formed the opinion that we're going to go lower, right? And like I said a second ago, if it looks good, it usually isn't, right? Unless you've attuned your brain to start seeing areas of real inefficiency, right? So when I look at a market like this, I see this huge imbalance here, right? That needs to be filled in the future. That's been filled about 50%. That's why we moved from here. Engineering more liquidity below all these lows here, grabbing equal lows, coming up to fill in some inefficiency here, coming lower, have a Wyckoff accumulation here before we take off rather heavily. Why do we stop here? Because we hit this order block. We hit the order block to mitigate the positions that we used to buy here to take out people that were selling here on a shorter time frame, to come lower to create what? An area of consolidation. On a lower time frame, again, remember, this looks like a much bigger area. We come down, taking out all those people, making what happen? People wanting to sell and people that wanted to sell here, and taking out people's stop losses that were buying here. After we do that, what's our point? Well, we've gotten rid of all our positions that were sells here, and we've taken all the people's positions here. So now all we have open is buys from back here, buys from down here, from here, here, and now from here. So what are we most likely going to do? We're going to take off, right? But what we're also going to keep in mind is once people have started to see that there's a trend line forming here, right? What have we created again? Liquidity below here, and below here. So what's most likely going to happen? Well, there you have it. We're going to come down to grab all that liquidity, and once we've grabbed all of it, we could either come and fill this order block, or we'll take off, engineering what? More liquidity in the form of, as you can now start seeing, this trend line, which got respected for half a second before it got broken, retested. So you might have been stopped out here, retested again and broken on a lower time frame, and then came down lower. Coming where? To this mitigation area, right? And again, this repeats over and over and over again. We create areas in the market that look pleasing to those that have not educated themselves or have not done enough research and testing in the market, so we can take them out, but we also continue to create areas that look so beautiful and presentable that gurus and YouTubers can go and use those areas to ultimately become profitable and teach you how to trade that way, so that more banks and more smart money can continue to take out your orders. Okay, so this video has gone way over, and I hope this was very helpful for those that stayed throughout the whole thing. I'm sure your perspective, at least I hope, was changed. If it was even just the tiniest bit, please leave a comment or a like. If you hated it, please tell me why. I'd love to know. But generally, this is the idea of liquidity, and this is why price moves into certain areas. Okay? So, thank you for watching, and stay posted for the next video where we're going to get into the idea of Wyckoff with liquidity and future videos where we're going to get into inefficiency, because that's what's going to, those concepts are the ones that ultimately frame huge and amazing setups for us. Okay? Thanks for watching, guys. This is mentfx. Stay posted for the next episode.